Hi, this is Friday, the 4th of November, and today I would like to show some examples of how pretty much a perfect day looks like. And I'm going to use oil and DAX because they were the best performers, but the other markets performed pretty well too. And one important point is also that I want to show a couple of examples of re-entry technique, which is very powerful. But let's start with the oil. This is London Open. The market, as you can see, is going down. And there's a break. We have a sell signal. There is a break after the London Open. And we go down. We don't know exactly where to go. The target is very much too far away. So I'm happy, especially early in the morning, actually, with oil especially, which is a US market, to just take the first 10 points and then see what happens. As it happened, there were more than 10, and then the market retraced. After this, the market went up the other way. Now this is quite interesting because as you can see, there's a sort of equilibrium here between buyers and sellers, and this has gone on throughout the night. And when you have this kind of reversal pattern and this kind of violent drop, in this case, in the morning, early morning at the opening, you might have a reaction. Now, I wasn't expecting this reaction to be that big, and this was, in my opinion, a little bit risky because we would have entered here once we have the signal at a very late stage. However, the stop wasn't too bad. It was just below the rapidly moving average. And the target was quite achievable, and it was exactly the same point where they started before London Open. So that was another very good trade, a little bit riskier than this one, but it worked out pretty well. In the afternoon, we had some news which appeared to be false later on, but some sort of threat of the Saudi to increase production. We don't really know what happened. What I see is that the market is going down quite a lot. And again, once I see something big like this, I am expecting a reaction, a retracement. The retracement didn't happen, and not only that, and the market actually broke this low here, and you can see that it's a completely different volume because this is on news and it's closer to US market open. But even here you see that the volume is quite high compared to the rest. So this is an important point. And if you break this important point, I'm quite happy to give it a go. Now, obviously, the first point of call for the stop will be up here, which will be not really good, actually, and completely impossible. But on these kind of situations, I'm quite happy to just put a stop somehow at this point, which is still quite big. But feasible. Why this point? Well, because the market may try to retrace until the test of this previous low here. As it happened, the market actually went down. It almost went to S1, and you know how important these levels are. And then it reacted quite forcefully. When you see this kind of pattern, this is definitely a reversal pattern, and you want to get out as soon as possible. But we had our 15 points. Actually, the first target would have been just above here, and it was just above the big round number at 44. So that was a great trade. And now I want to show you this. This is what I was talking about in terms of re-entries. The market goes down here, it moves up here, and again, as you see, you would expect a retracement to where it started. In this case, it didn't happen, and you have a reversal bar here. So now the markets can do two things. One is going up again, and one is retesting this again. And there's a moment of, quite a long moment of uncertainty here. So when the market touches this moving averages, and I've seen many times actually that the moving averages are acting as trend lines in a way, and there is some sort of reversal pattern. It is always, not always, but quite likely that the market will retry to continue on the trend and retry the low. And this is exactly what happened. Now what you could have done is either be very aggressive and sell, re-enter, just below this low here, or you could have done it the other way and wait for the breakout of this range. That was safer on one side because you were sure that the market actually was going your way, but it was a little bit riskier because the risk reward was much lower. I actually decided to go for a sort of mid-ground and enter at the break of this bar here. This bar was quite important because it looked like a doji. And I thought that if they break this one, they would probably try this. And as it happened, they did. So you could have had here 15 points, which was very good. And just to finish the day on a high, then you have the other kind of normal re-entry. Normal re-entry is that when you actually are still on a sell signal and you have a clear breakout of some points. In this case, you have a clear breakout of these points, which is S1, which happens to be the big round number. So I just wanted to make a little bit sure, and I actually entered the 90. Or the place to enter would have been, a safer place to enter would have been 90, just quite far away from the big round number. And again, after a little bit of sweating, you would have had your reward here. As I said, the news then were not confirmed, and the market then went up and then went down, but it was too late anyway. But everything was pretty much perfect today on oil. Now, briefly, I want to comment on the DAX as well, on a couple of things. First one, we discussed this on the trading room. You see that well, this is 8 o'clock, so the London Open is at this point. Okay, you could have entered here. Now, that's, to me, that wasn't a very high probability trade because, first of all, it was very close to S1, and then also I wanted to see what position the bulls were having. It can be that the bears are totally in control, but I just want to see some sign of the bear just to make sure that I know where they stand. And until I see this one, I don't really want to enter. I might miss, and sometimes I miss quite a lot of moves, but many times actually I save myself because out of this you can have a reversal. This is actually a pretty cheeky reversal bar on this particular kind of things. Now, I would quite happy now and quite much more comfortable if the market was just breaking this low here. As it happened, I had to wait a little bit longer because I just wanted to make sure that S1 was clear. So a much better trade for me would have been this one. But at these points, the market went down quite a lot, so I was happy with the scalp here. And this is what I have for 10 points. The other thing I wanted to show is something we discussed right now in terms of re-entry. You see the same thing. Trend is down. The market retraces, touches some important level. In this particular case, there are two. One is the S1 and one is the moving average, and you have a reversal bar. They're not really clear, this reversal bar. So what I wanted to do is I wanted to wait for the market to clear these lows here, 1 and 2, and see if the market will test S2. As it happened, it did. And so that was another very good trade. As if that wasn't enough, we had another opportunity. So the market went here. You see these big wicks here. They are a sign of exhaustion. So you can see that the market then starts going the other way. Now, are the bears still in control? I mean, how much are the bulls going to trying to make their point? And usually when you see that the bulls don't manage to break really clear of the moving average as they did here, or even here they broke a bit, but then really they didn't capitalize on that and the bears were again in control, you have another chance to re-enter. And these re-entries are important because you're actually entering the same side of the trend, and they have a high probability. Now this, yes, was a little bit close to S2, but we've seen that the S2 was already penetrated 2 or 3 times, so I was quite happy to take another scalp here. Now I'm going to cut it here because this video is already quite long, but I just wanted to show some example of this technique.